Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. And Vivek, it continues to be a range-bound trading session. It is also the monthly expiry, the last expiry for the year already. So the year has passed by so quickly. We'll talk about January series already tomorrow.
That's right. Good afternoon, Sonal. Year's gone by, and tomorrow the January F&O series starts with a few exits and a few entrants as well. Something that we will keep on our radar. Waaree Energy, Premier Energy, two stocks that will enter the F&O segment from tomorrow. It's been a volatile trading session in line with the typical expiry day, but we have a lot lined up on the show, so let's start off with the top headlines. Markets trade sideways after Wall Street saw selling pressure overnight. Nifty falls below the 50 DMA mark ahead of December expiry. Metals and auto fight for the bulls, while realty and healthcare stocks drag.
Waaree Energy slides despite commissioning an inverter facility. The company also announces management change with Chief Executive Officer Amit Paithankar set to resign in May next year and will be succeeded by Jignesh Rathore, who has been appointed CEO designate with immediate effect.
Timex Group India gain in trade as promoter exercises the oversubscription option in its offer for sale. The global watchmaker will sell an additional 4.47% stake.
Honasa Consumer is buzzing in trade after promoter Varun Alag bought 18.51 lakh shares and raised his stake by 0.57% via a block deal.
The Secretary of Department of Financial Services tells CNBC-TV18 that the insurance regulator IRDAI is set to come out with a draft regulation on insurance commissions. The Insurance Amendment Bill, which was passed earlier this month, had an enabling provision for IRDAI to be able to regulate high insurance commission payouts.
Okay, all right. Those are the top headlines, with Nifty hovering around the 25,900 mark. That continues to be an important level. For the mid-caps, it's underperforming the benchmarks, 0.3% lower there. And with the advanced decline ratio, that continues to be in favor of declines. And that gap is actually widening by the hour. So watch out for that, because mid-caps, especially the market breadth, has been under pressure for a while now. Metal index continues to do well, and that is one sector to watch out for. PSU banking index also leading to some support, and that's one of the reasons why we are seeing Bank Nifty being in the green currently.
That's right. Also remember today, while there are no changes as far as the NSE indices are concerned, quite a few weight adjustments will happen, and on the back of that too, you are seeing some buying, especially within the Nifty bank indexes, where you're seeing some buying emerge in the PSU banking pack, leading to a bit of a pop. But these stocks and a whole host of other stocks is what Sudarshan has on his radar. He's standing by the wall with our special segment, Midcap Movers.
In a weak market, one sector, one segment that is seeing buying is the metal, and that's being basically following the prices on the global front that we are seeing. Yesterday, we had seen a sharp fall, but after that, we have seen a sharp recovery in gold, silvers, copper, zinc, all the metal prices. And tracking that, we are seeing a big gain coming in majority of the metal names: SAIL, Nalco, Jindal Stainless, NMDC, Hindustan Copper, even Hindustan Zinc. All these stocks are trading with a gain somewhere in the range of 2 to 7 to 8%. Defense companies are seeing profit booking. Remember, yesterday we had Defense Acquisition Council meeting, and they had approved proposals for weapon systems worth almost rupees 80,000 crore. After that, we have started seeing a big fall coming in all the defense names. And today also, Mazagon Dock is down almost 4%. Similar fall is seen for Solar Industries and Bharat Dynamics. Even HL is down almost 2%. Now, some of the other mid-cap losers, capital market names remain under pressure. Angel One is the one stock which has been falling on a regular basis. Today also, this stock is down almost 3%. CDSL also is down almost 3%. PE Fintech is down because reports suggest that, not only reports, even DFS SECI has said that IRDAI, that is the insurance regulator, will come out with a draft norm related to the commission charger, and that once it comes out, it might have an impact on PE Fintech, or better we know by Policy Bazaar. That's down more than 2%. Coforge, since the time it has announced the deal to acquire Encora, the stock has been going in one direction, that is downside. Today also the stock is down more than 2%. Railway stocks have been seeing profit booking for the last two trading sessions, and today also IRCT is down more than 2%. But in in a weak market, so the stocks are seeing buying. Indian Bank, majority of the PSU banks are trading with gains. One stock that is the biggest gainer is the Indian Bank. Today also, it's up more than 2%. Timex has regained all the losses that we had seen yesterday, and today it's up more than 6%. One stock, Nazara Technologies, the overhang of SBI Mutual Fund selling the stake is gone, and now today the stock is up more than 3%.
Okay, some interesting names there. Thank you so much for joining us with those names, Sudarshan. So definitely some stocks which are bucking the trend if we talk about the broader market moves as of now. Let's now welcome Rajesh Palvia, who's the VP Technical and Derivative Research from Axis Securities, for a quick technical check on the markets. Rajesh, good afternoon. Do you expect the last 1 hour to be very volatile after the range-bound activity that we've seen so far?
Good afternoon. So it's a range-bound activity in terms of indices, but stock-specific action is happening in the market. Automobile, pharma, as well as metal. These three baskets are, showing sign of continuity of buying interest. So I think stock-specific action is rewarding to the traders as well as to the investor. Looking at the index setup, 25,900, 25,850 is the important level for this expiry. I think Nifty is trying to hold this 25,850 level, which is almost coincide with the 50-day moving average support area. Bank Nifty is also trading around this 50-day moving average support area. So both indices are trying to hold this important support area, and I think if Nifty able to regain about 25,950 level during the day, then some more pullback towards 26,000 we could see for expiry point of view, as major call concentration is still there at 26,000 level, but put base is still trying to show some support buying at lower level. Bank Nifty is attempting to cross 59,000 level. So I think Bank Nifty is looking more attractive for today's trade. And I think here we could see some action during the day, and 59,200 could be the level where we can see Bank Nifty to continue further more pullback. On the downside, 58,900 needs to keep as a stop loss. On the stocks front, I think we are focusing two stocks ideas at this juncture. One is on the metal side, that is SAIL, Steel Authority. A very strong buying action throughout the week, and the way weekly and daily charts are placed at this juncture, I think SAIL has potential to extend its gain. 145, 148 we are projecting target. On the downside, 137 needs to keep as a stop loss. And another stock is from the PSU banking basket, that is Bank of Baroda. After a corrective move, now Bank of Baroda is taking support from its important support area of 50-day moving average, and looking at the buying interest from the PSU banking basket, I think Bank of Baroda can extend its gain. We are projecting target of 296 to 298. On the downside, one can keep a stop loss of 285 to buy Bank of Baroda also.
Okay, thank you so much, Rajesh, for joining in, giving us a view on the markets, the Nifty, the Bank Nifty, as well as your individual trading picks for the day. Thanks once again. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. You're still tuned into Mid-Cap Radar. Let's talk about some stock-specific action then. Dixon Tech is in focus. The stock is set for the worst year since 2018. We've been seeing a lot of news updates and reports as well coming in. In fact, the stock is down 33% in 2025 so far. Hormuz is joining us to decode what's impacting the stock. Hormuz, it was basically a darling of the stock market once upon a time, but this year has not been so good.
It's been a very forgettable year for Dixon, and it's down for the 7th straight day today, mind you, and also for the fact that the 52-week high, which was close to 19,000 rupees, the stock has corrected almost 40% from those levels. Now, if you take a look at the annualized returns as well, for the year so far, the stock is down 34%. 8%. And this is only the third instance since its listing that the stock has delivered negative returns on an annual basis. The last time it did so was back in 2022 when it was down around about 30% odd. But since then, the stock had doubled in 2021. The stock was up close to 70% in 2023 and had almost tripled in value in 2024 as well. Now, what is so significant about this fall that in the month of December itself, the stock is down around 19% odd, and this has made it the worst month that the stock has had since January of 2023. Now, compare that to last year when the stock was up almost 170%. The stock had gained in 11 out of the last 12 months. Now, if you take a look at the month of December itself, not just the month of December, but the preceding 4 months as well, the stock has delivered negative returns. So it's 5 straight months of losses that Dixon Technologies has delivered. Never before in its trading history had the stock had declined for 5 months in a row. Now, earlier this morning, CLSA came out with a note on the stock. It cut its price target to 15,800 from 18,800 earlier, and it said that it is cutting its estimates because of 2 key reasons. One, because the smartphone sales in India are tapering off, and B, its key clients are losing market share. For the third quarter, it's expecting Dixon's revenue to remain flat but decline on a sequential basis, and if that happens, it might just pave the way for the company to cut its full year guidance for FY26. Now, they also say that although the short term appears cloudy, they remain constructive on the medium term outlook, and hence they have maintained their outperformance rating. But from the current market price where Dixon currently is, only 3 brokerages have targets lower than that. One is Morgan Stanley, the other being Goldman Sachs, and the other being Philips Securities, whose price target is as low as 9,000 rupees for Dixon. But despite that, most of the street still continues to remain optimistic on the stock. 27 analysts still have a buy rating, and the consensus estimates of price target still implies an upside potential of anywhere close to 50% for the stock, courtesy of the fall that it has had.
Well, thank you so much, Harmal, for breaking down what exactly is transpiring as far as the fate of Dixon Technologies is concerned. Well, moving on, the other stock in focus today is Indocount. Winnie joins in. Winnie, Avendus has written on this particular name, right?
Yes, absolutely. Avendus is written on the home textile spaces and all. On that, they've initiated coverage on Indocount Industries with a buy rating, and target price is 348 rupees per share. That's almost a 30% upside from yesterday's closing price. While they've initiated coverage on Welspun Living as well, but there it's a reduced rating. Target price is 135 rupees per share. Now, what are the triggers obviously that come in for the home textile industry? One, macro developments such as tariff that will start normalizing. There's a lot of progress that is happening on the FTA fronts. So that is a key positive as well versus with other countries. Even though US, maybe we are seeing imports decline, but at least the FTAs is something that could be a push for these companies. Indian players obviously are repositioning themselves in terms of the value chain through diversification, branding and expansion. And they believe that the demand moderation that one has seen coming in, because mainly the decline in US demand, that is mainly cyclical and not a structural change that has come in. So that is not much of a worry there. Now, for Indocount Industries, obviously they've said that they're estimating a revenue growth of around 13% over FY25 to FY28 and an EBITDA growth of almost around 31%. They believe the company is well positioned to become a big beneficiary once those trade deals are signed and trade policies actually come into place. So that is why they're positive on Indocount Industries, and Indocount Industries has a good share that comes in from the US market as well. So a key focus area is that the business is growing for the company in the past few quarters as well, and this is despite US share seeing a bit of a decline, but other countries are improving. So that is a key positive.
Okay, all right. Thank you so much. The stock actually, when we first spoke about it, was up just 2.5%, and look at that surge at around 12:30. The stock was up 8.5% and has continued to gain on those levels. Thank you so much, Winnie, for joining us. Let's now slip into another break. When we come back, our colleague Sudarshan will focus on key trends in the two-wheeler EV space that we saw in 2025. Stay tuned for that. Welcome back. Some recovery in the markets. The Nifty is above that 25,950 mark as we speak. There's a sharp surge from the lows of the day, and it is led by Bank Nifty. So that index should also come up for you on the screen because Bank Nifty is leading to the recovery that we are seeing from the lows of the day. We do have some recovery coming in from the metal index as well. Look at that, at the day's high, and metal index is the other one which is pushing the Nifty higher. As we said, it's the expiry day, so volatility is something that we'll continue to see in last couple of hours of trade today. But if we talk about 2025, that turned out to be a year of shifting gears for electric two-wheelers, where bold promises met hard execution and legacy OEMs steadily took the lead from startups. Sudarshan is here with a complete picture of it. Sudarshan, over to you.
The year 2025 began under the shadow of bold declarations from industry leaders, setting the tone for what promised to be a transformative year. Bhavish Aggarwal, founder of Ola Electric, had stated in August 2024, and I quote, "Tesla is for the West and Ola for the rest." He added, "Ola Electric is the first listed EV company in India and ground zero of India's EV revolution. By revenue, we are the fourth largest EV company in the world." I unquote. These statements reflected the ambition and optimism surrounding India's EV two-wheeler sector. Meanwhile, legacy players were ready to remind the market that execution mattered. Rajiv Bajaj of Bajaj Auto quipped in December of 2024, "Ola to Ola hai, lekin Chetak Shola hai," signaling that traditional OEMs were prepared to challenge the early mover advantage of startups like Ola with proven reliability and strong dealer networks. At the start of 2025, Ola Electric continued to be among the market leaders with market share in the mid to high 20% range in the first couple of months. But as the year progressed, that dominance steadily weakened. Ola's market share fell into the high teens by mid-2025 and in several months slipped below 20% as rivals ramped up production and retail execution. In contrast, TVS Motor and Bajaj Auto consistently gained share, frequently topping monthly sales charts. Ather Energy also strengthened its position, narrowing the gap with Ola. While Hero MotoCorp's Vida grew rapidly from a smaller base, by the second half of 2025, the electric two-wheeler market had clearly transformed from a startup-led phase to one dominated by legacy OEMs. So what went wrong for Ola Electric? Operationally, the company faced execution hurdles with production volatility and delivery inconsistencies leading to uneven month-on-month registrations. Ola's dealerless, direct-to-consumer model, which had earlier helped it scale rapidly, began to show strains as competition intensified at the retail level and rivals strengthened on-ground presence. After-sales and customer experience issues further weighed on sentiment. Complaints related to service quality, software glitches, and longer repair turnaround times dented brand perception. Importantly, Ola was not the alone. The entire electric two-wheeler industry faced meaningful headwinds in 2025. One of the key challenges was subsidy normalization. With government incentives lower than in earlier years, the effective acquisition cost for consumers increased, tempering demand, particularly in price-sensitive segments. Another issue faced by the industry was disruptions and tightness in the supply of rare earth magnets, a critical component for electric motors, which created uncertainty for EV manufacturers. This led to intermittent production constraints, delayed deliveries, and in some months added to the sharp month-to-month volatility in EV sales. Even as the long-term growth trajectory for electric two-wheelers remained intact, rising competition further altered the industry landscape. Nearly every major two-wheeler OEM now has a presence in electric mobility, significantly expanding customer choice. As a result, market share became increasingly fragmented, intensifying the battle for volumes and brand loyalty. Adding to these pressures were profitability challenges, elevated battery costs, aggressive discounting to sustain volumes, and high marketing spends meant that achieving consistent profitability remained elusive for many players across the industry. But despite these challenges, the electric two-wheeler story in India remains structurally intact. Total industry volumes continue to register year-on-year growth, underscoring steady underlying demand. Importantly, EV adoption expanded beyond metro markets, with penetration improving in Tier 2 and Tier 3 cities, supported by better charging access and rising consumer awareness. At the same time, product quality saw meaningful improvement. Newer models offer longer range, better reliability, and more stable charging performance, addressing some of the early adoption concerns and strengthening the long-term case for electric mobility in two-wheelers. So, 2025 will be remembered as a year of transition for electric two-wheelers, where leadership shifted, competition intensified, and execution became more important than disruption alone. For Ola Electric, the year exposed the challenges of scaling sustainably, and for the industry, it marked the beginning of a more mature, more competitive EV phase, one where consistency, trust, and service will define the winners.
Well, thank you so much, Sudarshan, for taking us through all the key highlights of the auto sector in 2025 and what exactly to look forward to as far as 2026 is concerned. Well, shifting focus, earlier today we spoke to Nimesh Chandan of Bajaj Finserv AMC, who says it has been a quiet end to an exciting year. Let's listen in.
Looks like a bit of a quiet end to a very exciting year, and I think people can enjoy that too. The sentiment actually is a bit low because of all the events that have happened this year. Otherwise, if you see, when I look at the economic cycle, we are in an upturn. The business cycle or the profit cycle of corporate, we are starting to see upgrades now and a much better outlook for next calendar year. And if you look at the credit cycle, that has also picked up. So asset quality is benign, and you are seeing pickup in credit growth. Margins, at least for NBFCs, are doing better. Banks will slowly recover after they price in all these rate cuts. So I'm actually seeing the fundamental cycle, that is the economic cycle, the profit cycle, and the credit cycle doing well.
Well, the recovery that we've seen in the market continues. The metal stocks, or most of them at the day's highest point, JSW Steel, SAIL, Tata Steel, all of them doing quite well. And even a consumer name like Nykaa has now surged to the day's highest point. But with that, it's all the time we have on this edition of Mid Cap Radar. MF Corner when we return.